Christoph, thanks very much for joining us on the Chatter. And today we're going to talk about energy, specifically European energy and this potential crisis. But what I wanted to kick off with is that, particularly if you go onto Twitter, there's a lot of doom and gloom. I'd just like to get your sort of sense just here. What is this outlook in terms of European energy? Is it really, really negative for economic growth, GDP? Or are we hearing maybe a bit too much gloom and doom, and maybe actually there is a little bit more of a middle ground? Where do you see it for Europe in the sort of medium to short term, particularly over winter?
Yeah, well, I think we need to understand this is not all very negative. I know the European energy crisis will last for so long. I think we need to remember that this is partially a structural factor. So it means that it won't disappear from one day to another. I think we need to understand that we are in a period for the coming years where we will face very high energy prices. So I think most of the time when we discuss it, we only focus in the very short term. In the short term, the most painful with energy prices is basically for companies. And we see that most of the companies, small companies, but also medium-sized companies, cannot face at all so high energy prices. But this won't disappear from one day to another. I mean, it won't disappear because we will get back to summer next year. It will also get back to the situation with energy prices becoming an issue next year, I strongly believe. Mostly, we have two issues with energy prices. The first one is clearly we as a misallocation of investment of capital in energy. We have focused a lot on green energy, but we know that this is not enough to face the green transition. We need, at least in the short term, some kind of fossil energy. And we did not invest enough in that. Of course, we were on the top of that very dependent on Russia. But I strongly believe that we need also to understand that as part of the green transition, we have done a lot of mistakes. We did not allocate capital to fossil energy, which are needed at least for the coming years if we don't want to have too high energy prices. And of course, we need also to diversify imports of energy, but it will take time. We know for some of them, typically for natural gas, we don't have all the infrastructure, so we need to build also terminals. So it will take time. So that's why I think in the short term, the European Union mostly has reacted quite well, including the UK, how to try to avoid rationing of energy. And I think that there will be no rationing of energy in most countries this winter. But high energy prices is the biggest issue, basically because we did not allocate capital the right way in terms of energy. We were focusing way too much on green transition in a short period of time, and we cannot cope with that. And we see it. I mean, we had very recently PPI in Germany for August. This is dreadful. I mean, the increase in prices, in energy prices, most of the companies, they cannot accommodate with that.
Within this scenario, I mean, we talked about, we've done this, we tried to transition towards green energy before we were ready to, and before we'd actually had an ability to transition away from our reliance on fossil fuels. So these are some small, sort of medium term and some longer term issues. If we just focus short term, things like GDP, I mean, what impact is this going to have? Even if we don't go to rationing, are we going to see a true recession in Europe? Are we going to see negative GDP growth because of, as you say, input prices, particularly PPI, never mind CPI records, these at levels which is a massive tax on consumers and producers?
Well, yeah, I think in terms of economic activity, we see very well that already some countries are entering into a recession. When you look at Germany, I strongly believe that Germany has entered into recession in the third quarter. It will happen the same more or less for France, perhaps in the fourth quarter of this year. And we will see, depending on the exposition of the country to imports of energy, there will be a strong or not recession. Typically, I think the recession in Germany, there is no debate. In 2023, it will be very deep and very long. We know also, Bank of England already mentioned for the UK that it will be a quite sharp drop in GDP. But I think for some countries that has decided to accommodate quite a lot households and corporates facing high energy prices, the recession will be much less deeper. Typically, I will give the example of France. Is more or less half of what the French government has spent to face COVID. And most of the governments, they will need to do this kind of whatever it costs for the coming years. But recession is clearly the baseline for most of the European countries. Will we face a wave of bankruptcies due to high energy prices or not? I think this is highly likely in some countries, perhaps not in France, as I said, because there is a very strong whatever it costs. But in Germany, I think there is this risk in Italy as well, and in some central CE countries, typically Hungary, Slovakia, the risk is much higher, clearly.
So what is the longer term solution? Because this requires more than just solar panels and wind, because there's too much uncertainty. And as everyone talks about in terms of the resources we need, we're nowhere near there yet. What do you see as being the solution for Europe? And over what sort of time period are we talking about that solution being put into place?
Yeah, I think the time period is key, because we have at least 2 or 3 solutions that matters, but in the short term, we need also to implement very fast solutions that could help households and companies. In the very short term, I think we need to focus on energy efficiency. What does it mean? So I will give you a very clear example. Energy consumption typically in the metro of Barcelona is extremely high. There is no surprise about it. They've implemented a system for climatization that is based on artificial intelligence, and they managed to lower the cost of energy consumption by 30%. Basically, in 1 year, the metro of Barcelona saved more or less 1.5 billion euro due to the lower energy consumption. So the first step is energy efficiency. But in the long run, clearly we need to rethink the green transition, which means that at least in the short term, we need fossil energy. We need oil, gas. There is no debate about it. But the problem is that typically if we start to invest from today into fossil energy, which is not the case, it will take probably 2 or 3 years to have a real impact, long-term impact on the energy bill. So we should not wait too long. Same thing with nuclear energy. I strongly believe that nuclear energy should be part of the energy mix. Perhaps we won't have it in 2040 or 50, but in the short term, for the next 10, 15 years, we need it clearly. This is a way for energy independence. In the long run, it lowers also your energy bill. So this is clearly positive. The problem is a lot of European countries decided to exit nuclear energy. So we should not wait, and I think we should clearly start to invest already in fossil energy, much more, and also in nuclear energy.
So, I mean, all of this sort of takes, as you say, takes a long time, because the nuclear option might be the most sensible option, but nuclear power stations take a decade to build, and in the UK it takes a decade to discuss whether they should be built. So really, what are we talking about here for Europe in terms of, let's say, GDP? Are we talking sort of 2 to 3 percentage points below where sort of maybe pre-COVID trajectory was, and we just have to accept that for the next 2 or 3 years?
I think for most of European countries, in the coming 3-4 years, perhaps even beyond that, they will have a very slow economic activity, clearly recession in the short term, but on the top of that, they will still have high inflation, because currently the belief is that let's go into a recession, it will lower demand, and hopefully we will have lower inflation. I don't think that will be that easy. This is more or less the same debate that, well, we have reached the peak inflation, but we realize that at the end of the day, well, inflation is not getting down so fast as expected. So I think we are in a very tricky situation. First, we need to be humble and to understand that forecasting inflation typically in the short term or even medium term, we don't have so many clues. Just basically because there are so much uncertainty, of course, the energy crisis, but we don't know exactly how demand will evolve. Let's say that on the supply side, there are COVID getting back or even a zero COVID policy in China. So this is a very tricky part. But my bet is that we will still have much higher inflation in the coming years, but we will end up in a very sluggish economic activity because most of the companies, they won't be able to invest for so much. I talked over the past few weeks with so many large companies, and they told me this is the month where we are looking how to lower our investment. And not only that, they understand that they may need to change their business model. It's not only business plan for the next 1 year. They understand that due to all the disruption on the supply side, I'm not only talking about energy, but I am talking how to get raw materials in production and everything. We understand that they really need to rethink their business model. So it will take a lot of time. We are entering into a period of uncertainty, and I clearly think that it will last for the coming years.
This is going to be a headwind for the euro, I presume, because the energy bill is going up until we have the alternatives in place, which is, we're going to have to find more euros to pay for the same amount of energy. At the same time, the economy is going to be a little bit sluggish, and I'm guessing that some of the biggest sort of export regions, which are actually close to Europe, these places are slowing as well. So it seems that, we've seen that negative trade balance at the same time the euro is going down. It seems like from every direction, there's not really a positive story to paint for the euro, even if the ECB is being aggressive on rates, which, that's also an impediment. So do you think that the outlook for the Europe is that it should structurally be going lower?
Well, yeah, I think you sum up the situation perfectly. I mean, this is not only about monetary policy. Most of the time when we look at the FX market, we are focusing on monetary policy in case there is a divergence. But as a matter of fact, nowadays, let's just talk about the energy crisis. This is a very negative shock on the single currency. And you have on top of that, of course, recession risk, investors that clearly wonder what's going to happen for the Eurozone in the coming quarters. So they exit the Eurozone. I was looking at Japanese investors because, of course, they play kind of a strong role also in terms of investment, and they are exiting some key markets in the Eurozone when we look at the flow of capital. Actually, it has been quite resilient against the dollar in recent weeks, I would say, but it will drop much more. I mean, there is no way that the euro can remain close to parity versus the dollar. This is quite clear for me that we need also to expect that the euro will get much lower. And for a lot of companies, European companies I am talking with, when they discuss FX hedging, all of them start to understand they need to be prepared perhaps for the euro to get at 0.96, something like that in the coming weeks, coming month, which is lower, but it could get even much lower. And we see it's dropping a lot against a lot of currencies, including the Swiss franc, on this kind of safe haven.
And so just sort of the final thing, kind of putting you a little bit on the spot, which is, this is maybe a 3-4 year adjustment period. We're still in probably the painful phase. Normally asset prices price in the painful phase rather than the whole adjustment period. Do you think that, let's say the lows in the euro will be in place within the next 12 months? Because as an external investor looking at Europe, you probably want to think, okay, at what point you want the currency to be the first to price this in, hopefully hit its low, maybe it's 85 sometime next year or 90 or whatever. Do you think that sometime over the next 12 months, even though we might be only 1/3 or 1/4 into the adjustment phase, do you think there will be some structural opportunities, or do you still think that until we get the adjustment out of the way, these will be cyclical opportunities rather than longer term secular structural opportunities?
Well, I think there are still some kind of opportunities. If I look at the stock market, even in this challenging environment, I saw like small and medium caps that has done very nice IPOs recently. But most of them were actually in the energy transition. So perhaps there is something to focus on. But basically, in terms of portfolio, I would say for the next 1 year, I will be clearly long US market. So I will look for opportunities in the US, stock market especially. I will still have in the short term, perhaps I will reposition it in the medium term, but I will be long US dollar. I will be extremely careful regarding the European assets, because I think perhaps we don't know exactly so much what's going to happen next year. There will be probably positive economic news at one point, but I don't see it happening anytime soon. So I prefer to remain quite careful. And after, perhaps, if we discuss it again at the beginning of next year, I will adjust my portfolio, but clearly the exposure is mostly on the US at the moment.
Well, thanks for that. Not exactly the most uplifting for Europe, but I think there's, it's kind of, there is a realization, but thank you very much for that. As you say, I think there's some people, if you are European investors, maybe keep your powder dry, but you might have to keep it dry for 9 to 12 months before the real opportunities take place then. Thanks very much, Christophe. Good to speak to you.
It was a pleasure.